Hey guys, it's Jamal McDaniel, your home solutions expert based in Atlanta, Georgia. Today I wanted to have a quick conversation around financing. And so here with me today, I have Brandon Danis.
Hey guys.
With Shelter Mortgage. And he's going to walk through just some overall questions that I have and just hoping that we can get some general questions answered for this audience as well. So Brandon, I'm going to introduce yourself, maybe a little bit about you.
Yeah, Brandon Danis, Shelter Home Mortgage. Been with Shelter Mortgage for over 10 years and in the mortgage industry much longer than that. So seen a lot of different things up and down market. So excited to share a little bit of knowledge with you guys today.
Okay, awesome. Well, thank you for that background. We'll go ahead and get right into the set of questions that we have for today. So first is around the debt service credit ratio. Mm-hmm. So that's been a pretty hot topic in the market, and just wanted to see if you could just go through and kind of explain that to us and give us some of your take around that.
Absolutely. The DSCR, the debt servicing coverage ratio, is a great loan for investors. So really it's designed for seasoned investors, but there are options for first-time investors to take advantage of this. And compared to a traditional mortgage, where we're getting all of your documents and saying, hey, do you have enough income to cover all of your debt plus the new mortgage? Then you're approved. With the DSCR loan, we look at each individual transaction. So it's a rental property, it's an investment property. And whether it's short-term things like Airbnb or a long-term annual lease, we look at how much income that home's generating. And as long as your mortgage payment is below the market rent, then you're approved.
Ah, okay, awesome.
Yeah, so it's a great way to really hone in on the deal itself. A lot of investors like it because there's a lot less paperwork. We're not having to get into tax returns, W-2s, pay stubs, if they're self-employed, all of that. So it's a streamlined, simple process. And we've got options with really great interest rates and terms for that.
Okay, is there a minimum credit score that the owner of that property would need to have for it, or is it just solely based on the criteria for the property they're leveraging?
Great question. So the individual buyers will need to credit qualify. So we will need to see their credit report. We do have minimum scores, but a lot of investors, meet that criteria.
Got it.
So it's a great option. But speaking of credit scores, one of the reasons why a lot of our investors really like the DSCR loans is with the option to close in the name of an LLC.
Ah, okay.
Yes. Okay. Most other residential mortgages must be closed in a person's name, but with this we can have all the paperwork done in an LLC. There are some restrictions and terms with that, but a lot of investors like having that option of closing in the name of an LLC.
Okay, no, that's good information to know. I know from an investor's point of view, I've had an LLC where I've used to purchase a property, mm-hmm. and it was a cash transaction, so for the most part, I've always been under the impression that I wasn't able to get any type of financing as an LLC that didn't show income coming into that LLC.
Exactly, and that's when we use the personal credit report mm-hmm. for that credit qualifying. So we have a way to kind of meet you guys in the middle there on the financing.
That's good to know. I think it opens up a lot of doors for folks who may not be aware of that, right?
Correct.
And similar to what I was doing was basically they might need to use my own cash mm-hmm. in order to make moves. So that's good to know.
And to your point, if you bought it cash mm-hmm. and it's in the name of an LLC, we can do a cash out refinance on that property you already own. Leave it in the LLC, and if you need $50,000, $100,000, how much equity you have, you can take it out of there and then purchase your next investment property cash, just like you normally would.
Perfect. Yes, we'll be talking about that more for my own property on that one. Okay, great. So thank you. So tying in with that, what are some of the common challenges that you're finding when it comes to real estate investors related to financing?
Related to financing, one thing we always want to keep in mind is when you're buying investment properties, we always need money in reserve.
Okay.
And so typically we're looking at 3 to 6 months of each mortgage payment you have financed. So if you own your primary residence, 3 to 6 months of that in reserve, and then for each additional property, 3 to 6 months there.
Got it. So if I have a rental property that is mortgaged, let's say $2,000 a month, mm-hmm. you'd want to ensure that I have that $2,000 times 6 in reserves in order to qualify.
Correct. And so it depends on the exact month. It depends on each individual qualification. but that's one of the biggest obstacles we see is the reserves, because it's different when you buy your primary residence. We're not looking for a lot of extra income or extra funds in reserve. We're looking for just enough to get to closing.
Okay.
But with investments, we do have to have those. So, but also keep in mind, it doesn't necessarily just have to be cash sitting in a checking account. We can use retirement accounts, we can use investment accounts, we can use those other accounts. Now, there are some limitations there, but it doesn't all have to be, liquid savings in a checking or savings.
Okay. And so is it pretty general in terms of retirement? Would it be like 401k,
Correct.
IRA, Roth, or are you kind of limited with just a 401k approach?
So any type of retirement account where you have access to get the funds out, kind of an emergency, kind of a worst case scenario.
Okay.
So I know there's some public sector pension plans, teachers in particular, that they really can't cash out that retirement plan until savings. So if you don't actually have access to the cash, we wouldn't be able to use that as reserve.
Okay.
But if it is a more traditional 401k plan or just an IRA, those are certainly options we can do there. And you don't have to take the money out. We just have to show that worst case scenario, you have access to additional funds if you need it.
Okay, so kind of like a liquidity approach, right?
Exactly.
So I'm weighing in some of my personal experiences, right? And so it's always been in my mind that I'm able to move faster with cash transactions. Sellers will oftentimes find a cash buyer more appealing. I'm not sure if you have any thoughts around those misconceptions, or how can investors be competitive in today's climate leveraging financing?
Absolutely. So there's a couple of ways where financing does have its advantages. And as far as the speed goes, cash does have a speed for the most part, but what we like to do is pre-underwrite, all of our buyers, whether it's a DSCR loan or even the full documents that we would need for other type of investment loans, because we have at least 3 different options available with Shelter Home Mortgage for investors. And whichever option is going to be the best for that buyer, we're going to go ahead and fully underwrite them, send all their documents into underwriting, have them review and approve them before they even identify a property. That way we do have the option to close quickly. We still have to go with the attorney or the title company to make sure all that gets transferred, which normally takes about 2 weeks anyway.
Yep.
The only major difference, once we're fully underwritten, is we still have to do an appraisal.
Okay.
But we do even have the option to rush those. We can get those back pretty quickly if we need to.
Okay. And how fast do you think that process can happen for someone financing?
So, I think for financing, depending on the loan program, I think, the fastest maybe 2 or 3 weeks.
Okay.
So we certainly can do it under 30 days if we need to, compared to cash as well. So, and the other advantage we see is because you're financing and typically taking out a loan, you've got the option, if you get into a situation where you're running up against a cash investor, of saying, hey, Mr. Seller, what if we give you $5,000 more? And if the property is worth it to you and it makes sense to do that, $5,000 over the next 30 years, maybe not that much, especially if it means you getting the property or not.
Right.
And when you only have cash, you may not have an extra $5,000. But using that financing for leverage, I think is a big key. And if investors like to buy cash, that's fine. Like we talked about earlier, do the cash out refinance in the properties you already have, take out that cash and use that to leverage.
Okay, no, that's good to know. I'll say again, personal experience as an investor, oftentimes using cash, I have felt like for the most part, what I'm putting out there is all I got, right? So
Absolutely.
I can't bring another $5,000 or $10,000 to the table to close the deal. So to that point, if I'm financing and now I can up my position a bit more by $5,000, right? That now makes me more competitive. So I think it's a great point.
And a lot of investors like financing because it gives them more leverage, right? That's all what financing is. And so I've had some people that found 2 properties, right? The market is what it is.
Yeah.
But they found 2 properties and they were planning on buying cash, but they found 2 that worked. So they're like, oh, well, let me do 50% down and 50% down. And they're able to get 2 properties now, because the numbers still work from they ran the numbers, they liked them both. They only had cash for one, but if they finance 50%, and we made it work for them. That way they can use their cash the most efficiently.
And then with that, is there something that is placed in the offer when, as an investor, I'm coming to the table trying to have a quick close, be competitive with other potential cash buyers? Is there something that offer that gets included to say that I can close fast as well, or are they looking at
it'd just be part of the pre-approval process
Okay.
and pre-approval letter. But typically if we're in that situation, I'm calling the seller myself and the seller's agent and saying, hey, here's what we've done with this buyer. Yes, we are getting a mortgage, but we've already reviewed everything. And here's our time frame to close for this particular scenario.
The packaging that you all offer, does that include like a construction loan?
We do have construction
piece?
loans,
Okay.
but it's only for primary residence.
Got it.
So, but we do have renovation loans that are allowed for, maybe a technicality there between construction and renovation.
Mm-hmm.
But typically, what we consider construction is going to be new construction from the
Okay.
ground up. But we also have renovation loans that are available for investment properties. So we've got a couple different options there. So if you're looking to, buy, fix it up, and then rent it out, the BRRRR method, we definitely have some options there.
Got it. If I found a property, let's say on the west end somewhere, that was $200K, ARV's $500K, am I then able to get that renovation loan up front, or do I have to get a traditional or conventional loan and then add the renovation loan on top of it once I've acquired or owned the property?
Great question. No, we can use the renovation loan to acquire the property.
Oh, great. Okay.
Yep.
Okay.
So we can do that. We also can do them as renovations if you've already bought something cash.
Yep.
Maybe you've been holding on to it, trying to figure out what to do with it.
Yes.
We can take that, whether it's cash or even has a mortgage on it, whether it's hard money or another type of loan. We can do renovation loans as a refinance too.
Okay. Yeah, I just went through that process actually. I think I mentioned to you earlier,
Yes.
where I had a property that I was flipping, and then I just decided to hold on to it as a rental. So it was a cash purchase, so I was in cash in terms of the purchase and renovations, but then just refinance so I can get some cash back while I hold
Exactly.
the property over a bit. So it's good to know that there's some flexibility there, especially with the rehab piece of it, or renovation piece of it.
Yep.
Awesome. I think it's great. As we wrap up here today, are there any final thoughts that you have as far as what investors should look out for?
Yeah, it's just like with anything when you're looking to finance, get the numbers, make sure you understand what you're doing. Housing can be a great way to build wealth. And so, making sure you're working with professionals that know what they're doing to help you build that wealth for you. So I think investing in properties, there's great options, and there are a lot of great loans out there that people maybe don't realize too.
Okay.
So, yeah.
No, that's awesome. Well, thank you for your time.
Absolutely.
And I'll say just on a personal note that we've met maybe 2-3 weeks ago and have had a lot of good, productive meetings. And I know Jason had worked with you before, so
Yep.
I've heard of you
Yes.
before I had a chance to meet you, but it's definitely been rewarding. We've had great conversations, and I look forward to working with you in the future.
Absolutely.
All right, thank you.
Yes, sir.
All right.
Absolutely.
Yep. Thank you for tuning in. If you found this helpful, make sure you hit the like button and subscribe for more real estate tips and strategies. Comment below with the topics you'd like us to cover in future videos. Also, our contact information is included in the description below. I am your home solutions expert.